All right, guys. So welcome to the second weekly stream, right? Where we do chart breakdowns. Both myself and Currency Meech. We have him here joined on Zoom. All right. So let's get into it. Before that, though, hope you guys are having a great Sunday. You understand? Have a blessed Sunday. Having a blessed Sunday. By the way. But this is what I trade right now. This is my instrument. This is gold, aka XAU USD. And I'm gonna do a chart breakdown starting from my top down analysis, the way I usually break down charts. So we're now on the monthly time frame. Over the past few months, we have three candle, including this candle right here, that is already bullish. Um, with the past few days in which the month has started. Today is the 5th, right? New week and new month. Today is the 5th, and we already have bullish momentum for this candle right here. This is on the monthly, right? This is already indicating to me that um, based on the fundamentals, though, I think Goldman Sachs is the company that says gold is projected to reach the 5,000 level. 5,000 level is right up here. We have quite some ways to get there. This is 1,084 pips, basically. No, it's 10,000 and 10,846 so far, right? So that's what we have to get up there, basically, when it comes on to pip count. But let's get into the breakdown. So far we're seeing three bullish candles indicating strong bullish pressure. We are yet to see a retracement on the monthly time frame, but might be due to the high bullish volume that we're experiencing. Maybe we get it on a lower time frame, for example, a daily or a weekly time frame. So let's see what's going on with that. So let's go ahead and drop down to the time frame that follows. So this is the monthly. So now we're dropping to the weekly candle. Four of these candles make up that big bullish candle that we're seeing. So let's see what was going on for the previous weeks. All right. So again, strong bullish candles for the past few weeks. This is 1, 2, 3, 4, 5, 6, 7, and today. We don't know how today will turn out, but let's see. But for the past few candles, we have been experiencing a bunch of bullish momentum, right? So this is on the weekly. There's not much because the market is so volatile. It's kind of hard to see what's going on really on the lower time frame for the market, being that we have all this volume in the market. So let's drop down to the daily where we can see. Let's clear up some of the noise basically. Let's see more details. My mistake, not clear up the noise, but see more details. All right, so we have levels right here in which the market broke past. I think we could draw an ascending triangle right here in which the market respected before continuing up. This part might have tricked a lot of persons when it came onto structure. Let me just drop down to the 4 hour real quick. Right here, when persons saw this big drop right here, if the market did not break a major level of support, which is right here, the market was still in an uptrend, still creating higher highs and higher lows. This is a higher low point on the 4 hour, and I think maybe it can be shown on the daily time frame as well. Yep. So yeah, we're still getting higher highs and higher lows. Right. So there's no reason to basically be looking for sells even when the market does these steep retracements, right? Persons looking at the candles might say, oh, so the market break structure, but It's not a breaker structure because it's still respecting, if you notice right here, we can draw a level. So let this be my random line. We can still see that the market is respecting this level right here, yet to break it as well. Understand this right here was not a break as well because this is basically a doji, right? So we have some level of indecision going on there, even though it wicked. Um, we did not get a full candle close below the market, below this level of support in which the market was respecting to say, hey, the market broke structure. So basically, we're on the daily time frame right now, which you can't really see much because of the strong volume in which gold is pushing with. And remember, the level in which we're expecting gold to be at is all the way up here at 5,000. Right? Let me just do this a quick way. 5,000. And that stands for 5,000 pounds, $5,000 per pound of gold, by the way. On the fundamental side, the Feds have not dropped interest rate more than 0.25. So interest rate is kind of high right now. It's kind of higher on the high side, which means investors are going to take their money out of the US stock market and put it in gold, which is the safe haven until they can get a big drop on the stocks so that they can buy into stocks basically. But being that the interest rate is too high right now, they'll be charged for a whole bunch of fees. So that's the reason why gold keeps going up and going up and going up because the interest rates are so high. It doesn't make any sense. Investors take up their money and put it into stocks right now with the high interest rate. Maybe when the interest rates go down, based on what the Feds are doing with the US dollar and all that. So yeah, on the fundamental side, we're still expecting a lot of bullish momentum. So this right now we're on the daily. What we can do is zoom in. Let's zoom in and we notice again, this is a level right here, a support level in which the market respected to push up. So we can notice what the market, we can look at what the market is doing, creating higher highs and higher low points, right? So still moving within structure. Only way in which you can look for a major selling market is if the market break below this previous support level in which it was it created. Let's drop down to the 4 hour time frame. So as of market opened right here. Let's see here, right there basically. Market open right there and open with a lot of volume. What I usually do is drop down to the 1 hour. The 1 hour time frame is my main analysis time frame, by the way. So I usually drop down to the 1 hour time frame and I would mark off by 9 p.m. right there with a horizontal line to ensure that I'm taking trades behind this line right here. Anything before, you might get wicked out, stopped out, fake out, anything of that sort. So usually what I do is have the line there to ensure that I know where I'm at when as it regards to time frame. All right, as it regards to what time it is. So again, we could draw an ascending triangle right there in which the market respected to continue pushing up. Right here is the point in which I was making reference to as well. Right there, where the market did have a big dip below a previous support. However, here is the main level of support in which if the market did not break below this area, then we can expect sells. So for now, it's all buys on gold, right? Respecting structure, respected the trend line, and we also had a break above the trend line, the moving average, my mistake, to come back to retest the moving average again to continue with the overall push to the upside, right? So for right now, gold is a bit choppy. What I can do is I could draw a fib on the most recent swing point, which I would be considering as right here. Pull up my trend line, point A to point B. If you notice, market respected the trend line as well. The fib tool, my mistake. So the market respected the fib tool, which is the 23.6, indicating strong momentum. This right here, this fib tool, this fib PRZ, price reversal zone, right here is a strong zone expecting, in which you usually expect strong push from this level right here. Usually at times too, market gives a don't really trade break and retest, but break above this level of resistance right here to come back to tap into this level right here um, to continue pushing, but it doesn't do that all the time. So let's break down this area right here as to why you would be taking a trade. But overall, let's look on structure. The market is creating higher highs and higher lows leading up to this point. Higher highs, higher lows. So what are we expecting? A higher low point within structure, right? I usually have as well my institutional levels drawn on the chart. So those are whole numbers. And if you realize we have a major institutional level right here, which is at 3,900, right, in which the market also tapped. So let's go ahead and break down this further. This is on the 30-minute time frame. So right here, we have strong bullish engulfing on the 30-minute, right? Market came back down to give us an entry. This is on the 30-minute, by the way. Market came back down to give us an entry to continue pushing up. But let's go on a lower time frame because we don't take trades on the 30-minute. We also have the 5 minutes. If you notice right here, we have a low point in which was created, looking for a lower low to continue with trend. However, market created a higher low point right there. So based on right here, experiencing this higher low point, as well as looking at a few confluences from the 1 minute time frame, we have a level right here in which the market continued testing, which I can draw the random line from there to there, mainly right there though. So let's change the color of it to orange right there. So we have tap, tap, tap after this point, in which the market break above this level right here is a clear indication that the market is transitioning. So after this point is where I will be taking a trade if I were to take a trade right here. Right? And so said, so done. Basically, I'm currently in this trade. Understand? My main target is above the most recent level of resistance right here. I usually target 211. This is 210 pips, but we have strong momentum. No doubt that the market will continue push past my take profit and smash it. So yeah, that's all I have for us right now. Being that the market is already in a trade, right? Is already we're already in a trade right here. I can't really analyze it anymore any further because I'm expecting TP, but however the market can still pull back down again, break and retest to come retest this level of resistance. But until that, then let's just sit it out and watch what the market does. So now at this point, I'll be passing the baton over to my fellow trader, right? Kurrency Meech. Right, let me stop sharing as well so that he can go ahead and start sharing. All right, your mic is not on, bro.
Yeah, you hear me now, right?
Yeah, yeah, me I hear you now. All right, take the stage, bro.
All right, so first we're gonna start from the monthly time frame because we want to get that top down analysis. So when we are doing our top down analysis, we first want to identify where the volume is at, right? So identifying the volume, you're basically using your higher time frames to see what type of candlestick is being printed. Now, looking on the monthly time frame, we have back-to-back bullish candlesticks, right? So understanding how a candlestick is made or higher time frame candlesticks are made is basically if you're seeing bullish type candlesticks on higher time frames, you're seeing bullish type structure or bullish type trend on a lower time frame. So me seeing back-to-back bullish candlesticks on the monthly time frame, that is telling me that okay, the market is basically in an uptrend on the lower time frames, right? So now the month just started and we're seeing good amount of bullish volume within the month. So we're just 5 days into the month and we're seeing a lot of bullish volume. So back to the weekly time frame, we saw we had a strong bullish week last week, right? So that is telling us that okay, we are in a strong uptrend. So now on the daily time frame, when we're on the daily time frame, we want to look for major areas where we're getting taps. Along with that, we can also add institutional levels, which as Pipto Payout said before are whole numbers. So let's put 46,000 on the chart, right? That's an area that we got. As you can see, taps. We can also put half points. I like to use half points in my trading strategy because I realize that we are getting a lot of taps on the half points as well, as you can see. So 46,000 is an institutional level for me. 46,500 is also an institutional level. And then we're going to add 47,000. So 47,000 is also an institutional level. So as we can see, the market on Friday spiked up to the 47,000 institutional level, got rejected and started to pull back. Right? So me looking at this right now, I don't want to identify my major areas of support and resistance. So if I was supposed to plot a fib on this area, I want to find where my last swing point was. So if I plot my fib from, let's say, point A to point B, so that the market gave me a 38.2, and we had a negative 27 TP, right? So what I would do now, I would adjust my fib to the new point A area, and as we can see, we're having back-to-back 23.6s. 23.6 is still above the 23.6. So that is basically telling me that, okay, the market is very volatile right now, and we're not retracing to that 38.2 area to create a solid area support, right? Or solid area structure. So now I understand that, okay, we are very bullish. So I'm only looking for the buy opportunities at this point. So I have that in my head that, okay, buys. I'm only looking for buys right now. There are sell opportunities that are going to be presented that you can take advantage of, but you have to keep it in the back of your head that, okay, the buys are more important. Because when it comes on to getting an entry for the buys, it's going to be much smoother than looking for the sells, right? You're going to have a smoother trading experience looking for the buys right now than the sells. So when I zoom down on my 4 hour time frame, 4 hour structure, I am seeing higher highs and higher lows being created. So I'm going to mark off all of my swing points right here. So these areas are the areas we want to see the market maintain, right? We don't want to see the market break any of these areas, because if we should get a break of any of these areas, we're going to have the market going in a reversal or doing a reversal. We don't want a reversal right now. But if it does happen, we have to just work with it. But the trend is bullish. We want to see that trend continue being bullish, right? So all of these areas are my main areas of support and resistance. So this is the last area that we pushed off from, right? Now, market created a higher high point. Check 1 second. Now, after a higher high, we are expecting a higher low. All right, so if I should plot my fib now based on the 4 hour time frame, I would plot my fib from first point A right here. Boom, point A, because that's my last higher low point that was created, to point B. Right? Now, I would like to see the market pull back into an area interest like this at the 46,500. We can also add other confluences to that area, like probably a area of resistance here that we pushed above, a area of daily resistance. So we can add that as a confluence as well. Now let's go on the 1 hour time frame. So with US 30, I mainly base my setup, my trade setup of the 4 hour time frame. Reasons: the 4 hour is giving you enough, and it's not giving you too much data that you will get confused as to what you're seeing. Because looking at the 1 hour time frame, you're seeing a lot of breaks of support, you're seeing a lot of breaks of resistance, you're seeing a lot of stuff that can confuse you if you don't have an eye for structure, right? So when we see things like this happening, like for example, an area support like this is broken, right? Someone that don't understand structure would say, oh, the market is breaking structure here and we're going to have a reversal and this and that. And well, the market did have a reversal here, but this reversal isn't a reversal that broke structure. This reversal was just something that had to happen to have the market give you that retracement, right? So if I zoom out on my 4 hour time frame, I'm not seeing that area support getting broken. All I'm seeing is an area of resistance that was created, which is a higher high area resistance, right? And then I saw a higher low being created. So sometimes you have to zoom out if you see you're on lower time frames and it's getting a little bit too crowded and you're not understanding the data that you're seeing. So I like to use the 4 hour time frame because it gives me a lot of clarity when it comes on to structure, and I'm seeing my swing points very, very clearly. Okay, so we have our higher low point here, our higher high point here, and our higher low point here. Then we had a retest of this level of resistance, another higher low, we had a break, then we have a higher high. Now we're just waiting on that higher low point to have that continuation of the trend, right? So looking on the 1 hour time frame, now we can basically mark off minor areas of support like this area exhaustion right here. Now, if you understand how liquidity works, right? You understand that there's liquidity lying below these areas, right? Because there are a lot of people that have entries at these areas and they have their stop losses below these areas. So the market is attracted to liquidity, right? So it's a possibility that we can pull back down to these areas, grab liquidity, and continue to move or we can just create areas of support here and move. Now, if we should get an area of support here, it's very risky to me to take an entry from these areas because I don't have a lot of confluences within these areas. And you need to understand too that the market is at an all-time high. The market has never been up here before, right? So seeing that the market is at an all-time high, we don't have a lot of data to the left that we're working with. So we have to work with what is in front of us. So these areas here can be potential areas that the market respect. We also have an area of resistance here that we might get a tap in to continue to push. But I cannot take a trade until I see an area of interest getting tapped in and being respected and giving me that entry signal that I always look for, and I base my trade off. So areas like this minor area support here, I would like to see the market pull back there or even pull back down to this institutional level, this 46,500 level. Give me a test or even back into this area. Now, if we should have the market breaking these areas, we don't want to see the market push past the 46,000 area of interest. If we have the market push past that area, we'll no longer be looking for buys until we get that strong area of support being created. Now, as Pip to payout said before, interest rates are high right now. So a lot of people are invested in gold, are taking their investment out of stock. So Dow Jones, US 30 is a stock-based indices, right? So it's based off the 30 major companies in the United States, right? Companies like Apple, companies like Walmart, Ford, those companies are the companies that build or have a pool in this stock, right? So if we don't have people investing in the stock market, it's going to cause US 30 to sell, right? Because we're not getting a lot of investment. But the feds, we don't know what the feds are going to do about the interest rate. As they are saying that they're going to drop interest rates. We don't know as yet until the data is released, but hopefully the data is released and we get good news. All I want to see right now to take a trade is the market pulling back into any one of these areas of interest. Give me a nice higher low point, and then I'll take a trade. But right now, there's no trade opportunities on US 30. So let's go back to the 4-hour time frame. What I can do though is show you guys the trade opportunities that was taken or could have been taken last week. So last week I had a fib plotted from point A to point B. Right here, we saw that the market came down, tapped the 46,000, consolidated a bit, failed to break it, and then created a higher low point at the 61.8% Fibonacci, which is our golden zone. Also our PRZ level. We had a SMA test as well, which is telling us that okay, is a possibility that the market is respecting this area as an area of support. Now, as I said before, I like to use these area of support as my areas of interest because a lot of times you see the market tapping in these random area of exhaustion and respecting it. So coupled with this and the confluences I'm seeing on my 4-hour time frame, if I should break this trade down on a 15-minute time frame, we would see that okay, the 15-minute was on a downtrend, right? So we were seeing lower highs and lower lows being created, right? Lower high, lower low, lower high. lower low. So the first time we tapped into the area, we got a lot of momentum from that area. So the first time we tap, this is our first time that, okay, there's a possibility that the market can respect this area. Because we got a lot of volume coming out of this area. This was also during NY session, right? So created this lower high point, we pull back down, we spiked again, tapped into the area interest and rejected it. After we rejected it, we created another lower high point and then we created a higher low point. So this higher low point here is telling me that, okay, the market is failing to create new lows below this area interest, correct? So my entry would have been based off that higher low point that was created. That would have been my first entry opportunity. It's taken basically off this engulfing variation right there. Stop loss would be below this weak point because we want to have our stop loss out of fluctuation. No, this is a big ass stop loss to be honest. Normally when I'm looking to take trades, I'm looking to risk anywhere from 80 to 100 points. This is a 208 point stop loss. Right? So understanding that this is a 208 point stop loss, you have to know how you're risking or the amount of money you're going to risk. Because if you normally risk, let's say, $100 per trade, if your stop loss is double your normal stop loss, you now have to drop your risk from $100 to now $50. So you're still risking that $100, right? Because your stop loss in points has doubled, but your risk is the same. You're still risking the $100 because if you should get stopped out of this trade, you would be risking the $100 because you're only risking $50 based on the stop loss in points. Now, this trade pushed off from there. We had a lot more trade opportunities that could have been taken within this entire thing. Normally, I target 250 to 300 points. So if I took a trade there, my take profit would have getting hit from, let's see, 8 a.m. Friday. So my take profit would have gotten hit market Friday, right? Now, we had other opportunities here as well because as you can see, the market came here and created another higher low point that you could have taken entries at. Boom. Now, after that, you could probably base your stop loss here, below here, because we know that, okay, since the market is creating new higher lows, you want to base your stop loss below the previous higher low point that was created. Because, if the market break past this area, our trade is basically invalid, right? So that was another opportunity there. Take an entry, and this is another 300 points. We had another opportunity here. If I should break this trade down even further on the 5-minute time frame, you'd see that, okay, the market came here and created another higher low point. You could have probably taken the trade there. You had another 300 points there. So there's a lot of opportunities being dished out in US 30. You just have to be willing to risk it and take these positions because some of these positions are very risky, but as long as you're following your risk to reward and you're not over leveraging, you should be good. Now, after the market pushed up, right? Because remember now, look on the 4 hour time frame. We're basing the trade off the 4 hour time frame. The market did a 61.8. Normally, when the market does a 61.8 retracement, it doesn't just push up to the negative 27. Normally, we would have a little bit of consolidation before it pushes, or we would have like double bottoms before it pushes, right? So that was what took place within this area. The market created the 61.8%. We tapped back into this area resistance that was based off the daily time frame, which is this here area. Also, when you look on the daily time frame, we had a nice engulfing candlestick, and then we had dojis. So that is telling you that, okay, the market is still bullish, right? We didn't really push back below this here area as support, and look on the wicks as well. The wicks are getting higher each time, right? So back on the 1 hour time frame, what we could have done here is also plot an area of exhaustion based off this area of resistance. So we had an area exhaustion plotted there. Back on the 1 hour time frame, we saw that okay, the market was respecting this area. We could have also plotted ourselves a random line to show that okay, this area of support was being respected the entire time and it wasn't being broken because we're getting respect. We had a bearish candlestick, but what we had a doji and then a bullish candlestick. So what we normally do is X out the doji and focus on the two candlesticks with the volume. So we have bearish, bullish. That is a sign that the market is respecting the area and not breaking the area. So an entry that was taken here was based off the 5-minute time frame on this here higher low point that was created. So boom, entries here. So if you take entries here, right? Remember your entries is taken on the 5 minutes, but your trade setup is based off the 1 hour time frame. So if my trade setup is based off the 1 hour time frame, I don't want to have a stop loss that is based off the 1 hour. So where was the last area of exhaustion based off the 1 hour? Right here. So I would have my stop loss below that area of exhaustion. So this was a 120 point stop, and you're targeting a 1 to 3, right? Or this, for in this case, a 1 to 2.8. So this was 340 points, and you're risking 120 points, right? So as you can see, the entry taken there, the market came here, spiked down. So as you can see, if I base my stop loss off this here area, the market would have just came and stopped me out and then continue to push. But I base my stop loss off the previous because this is our higher low point, This was just a retest. So this is a higher low, retest, and another retest. So this is a higher low point, retest, retest. So if this is my higher low point, I have to have my stops below my previous higher low point, which was down here. So having my stops down here, I'm now out of fluctuation and I'm out of that range to get stopped out. Right now, when you look on the 4 hour time frame, your entries are basically within that area of interest. You're also in contact with the SMAs that is telling that okay, an area support can be created here, and we have TP at the 46,500 area of institution. Right? Now, as you can see, the negative 27 did got it. Also the negative 61.8 and the 47,000 institutional level, which is very, very good. So all we have to do now is just wait on that higher low point. Now, there's a possibility that the market can just continue pushing because we don't have signs of it wanting to reverse right now. Because you can see we had that higher low point being created. So we could probably take trades here, but taking trades here, I would have to have my stop loss all the way down here, right? So if I should take a trade here, my stop loss would have to be all the way down here below this area for what 237 point stop, and I'll be targeting back my institutional level for 204 points. So if I should take a trade now, it wouldn't make sense to me to take that trade, so I just wait for that better opportunity if it comes. So I normally start looking at US 30 from 6 o'clock in the morning. It's now 9:18 or 18 minutes after 9. So I won't be looking on US 30 for a couple hours. Good. So that is basically it. We're just looking for buys right now. We're just waiting on that nice retracement. Hopefully we get that nice retracement in the morning, or we get it during London session. So come New York, we can take advantage of this opportunity. But right now, we have to just wait and see what happens. And I hope everyone have a good trading week and this information helps. I guess that's it for me. So that's it for me. Pick to pay out. I'll hand it back to you.
All right, thank you, Currency Mish. All right, guys. That there ends another installment of the Sunday chart breakdown, basically chart and chill with Currency Mish and Crypto Payout. I hope you guys have a productive week. You understand? Hope you guys took notes. If you will took notes, if not physical, maybe some mental notes. And hope you guys enjoy the rest of your Sunday and make some money this week. God bless you.